Welcome to my channel where I talk about stocks that are interesting. So if that interests you, then please consider liking this video, subscribing to my channel, and leaving a sassy comment below this video. Or not, whatever. Either way. Today I'll be talking about Aris Water Solutions, Inc., ticker ARIS. Small cap company that services the oil and gas industry. Very, very strong performer, up 245% in the last year here. So today, as always, I'm going to give an overview of the company, talk about what they do, talk about the narratives that may be driving the stock, along with the fundamentals. We'll take a look at the financials, take a look at the valuation. We'll also take a look at the dividend if they pay one. Spoiler alert, pretty much every company I look at pays a dividend. However, we're going to take a look at that as well. We're going to discuss some of the risks with investing or potentially investing in this company. I'm going to give it a grade. My grade, is it a buy, sell, or a hold? We're also going to conclude, as we always do, with technical analysis. And as always, this is not a recommendation to buy or sell a particular security. I am not a registered investment advisor. I am a guy who likes to do this stuff and sometimes has intelligent opinions. So please do your own research when investing in stocks and other securities, as they do carry the risk for potential loss. Anyways, let's get into it. Aris Water Solutions. Also, before we get started, follow me on Seeking Alpha. I write those. So if you're interested in that, seeing what I have to say, a lot of the times my writing is a lot better than these videos. A lot easier to follow. And I don't ramble as much, obviously. So anyways, be sure to follow me on there. Let's take a look. Aris Water Solutions. What is it? Environmental Infrastructure and Solutions Company provides water handling and recycling solutions. The company's produced water handling business gathers, transports, unless recycled, and handles produced water generated from oil and natural gas production. Its Water Solutions business develops and operates recycling facilities to treat, store, and recycle produced water. Founded in 2015, headquartered in Houston, Texas. Roughly $1.5 billion market cap. What does water have to do with oil and gas? Okay. First off, I'm not an oil and gas guy. I did live in Texas for 4 years, did live in Fort Worth. Anything I know about oil and gas largely stems from a few of my friends that I met down there in their expertise or experience in the industry. So we're going to dive into what this company has to do with oil and gas. But before I do any of that, I am going to guess that what this company does has to do with fracking. So fracking uses water. It uses water and it uses sand, pretty sure, to perform the process. So those two things are byproducts. In other words, part of the reason why fracking might be controversial is because it not only does it have environmental concerns of what it does to the actual land that is utilized for the process, but that it also uses water and therefore dirties that water. So again, we're going to investigate what this does, what this company does as it pertains to that. However, I would guess that it has to do with fracking, maybe among other things. We know that with the shale boom in Texas, there's a lot more fracking going on. This company has benefit from strong tailwinds over the last year. It's founded in 2015. The way I understand it is the technology that we're utilizing now to frack shale. Again, oil and gas experts out there, please correct me if I'm wrong. This is the way I understand it. The technology we have now to frack the shale It's only existed for 10, 12 years. So this company has basically been born out of this new technology, is what it appears to be. And they're benefiting from this tailwind. I have a lot of concentration in my portfolio in oil and gas, in fossil fuel production, mainly because I think that one, energy supply is more important than pretty much anything in our economy today, especially with increased power demand coming from AI, coming from more technology, semiconductors, everything. It's very critical for every nation to have as much energy security as possible. The United States, are now the largest producer of energy in the world. However, we do not have all of the refining capacity, so there is still a lot of runway there to further secure our energy supply. This is a small player. It appears in a very small segment of the industry. Let's take a look at the website to glean some more of this insight. Okay. Um, Sustainable produced water management. Aris Water Solutions is an independent, growth oriented company headquartered in Houston that is a leader in developing and operating produced water infrastructure and recycling for the largest operators in the Permian Basin. So it's highly exposed to the activities of one particular region. Living in Texas, one thing I learned about the Permian is that it's very boom and bust. It's very boom and bust out there when oil prices are above a certain level, above 75 ish a barrel, $80 a barrel. People are there making money hand over fist. In fact, I want you to look at something very interesting just to give you an idea of what's going on. Look at this list of U.S. metro areas by GDP per capita. Okay. Okay. So we know how expensive it is to live in San Jose. That's where I live, by the way. San Francisco, so on and so forth. The GDP per capita, the number one metro GDP per capita is not San Jose. It's not San Francisco. It's not New York City. New York City's eighth. It is Midland, Texas. Why? Because you see these wells here, you see this infrastructure, you see what's going on in Midland, you see what's going on. There is energy, okay? It's all driven by oil and gas. You can imagine that when gas prices are above, or excuse me, oil prices. I don't know if I said gas prices above, I meant oil prices. When oil prices, I'm looking at the commodity screen right now, oil prices are $78 a barrel. When we're at that level or higher, people in the Permian are making millions, okay? They're making so much money. When it dips below 60, or below 65 like it has in recent years, it is a full-on depression out there. um, See what's going on with this company. um, what it appears to me is that they are, uh, in their words, building sustainable long-term growth and value through the construction and operation of integrated produced water infrastructure systems that provide high capacity gathering, transportation, disposal, recycling, reuse, and brackish water supply solutions to oil and gas. So in other words, you need water as an input to your fracking or whatever you're doing over there. We've got it. Not only are we supplying you with the infrastructure to deliver the water. I mean, look at this landscape. Where's the water at? Where's it coming from? Right? This company. So not only are they supplying the water to the as an input. Oh, here's a clue right here. Solaris Water Midstream. Interesting. So not only are they providing water, but they're also recycling the water, reusing it. Okay, this is an input into oil and gas production. Okay, interesting. I think that's what's going on. Let's see if we can learn more. Okay, here we go. Leading developer and operator of critical water infrastructure assets in the Midland and Delaware basins of the Permian. See the Permian here. Okay. A growing infrastructure footprint allows us to aggregate large volumes of produced water from multiple operators to reliably and responsibly treat and redeliver recycled volumes back to our customers. We safely dispose of produced water that is not recycled in saltwater disposal wells. And what is produced water? Produced water is water that is extracted from the ground along with oil and gas during the production process. It can also include fluids used during drilling, such as hydraulic fracturing fluids. Produced water can include water, chemicals, and fracture fluid. The amount of produced water, blah, blah, blah. It's managed in a variety of underground injection. Here's what's interesting about this, just off the top of my head. Can also refer to water generated from other processors, scrubbers and power plants, uranium processing, geothermal energy production, and carbon sequestration. I don't want to get too ahead of my skis here, but if this company is in the process of doing this one super niche thing for oil and gas, and produced water is also relevant for other energy production, does that not imply that there might be a long-term growth runway and further tailwinds and further diversification for this company? That's kind of sexy, right? Pretty bare bones. Here we go. Midland. So they have an office in Houston, Midland, and Carlsbad, New Mexico. Makes sense. Okay, I think what we need to do is we need to look at their earnings. This is a very stripped down website, not a lot of information. Aris Water. Focused on unlocking value in complex wastewater streams, we provide full cycle sustainable water handling and recycling solutions that improve the environmental footprint of our customers. That is sexy. We're adapting and developing technologies to treat complex water for reuse in multiple industries, identifying high value minerals and wastewater that can be commercially extracted. Okay, here's what I really like about this. I have made a video about Republic Services, the big waste management company. And of course, Waste Management, their contemporary. What's really great about environmental services companies like this, like the trash collection companies, is that they have an incentive to find a way, like with this waste that they're collecting, they have a motivation to monetize that waste. In other words, can we recycle it? Can we repurpose it? Can we reuse it? Can we sell it? Can we fix it? Can we turn it into an asset? But they're getting paid to collect it. So when you're getting paid to collect inventory that you could also monetize, that's really sexy to me. That I like that. You're getting paid to accumulate inventory. Now you have to spend money to monetize it. I just did a video about a company called Xylem. If you haven't watched that, watch that as well. The big long-term theme there is water security. They're providing services to utilities. This company is also a water services company, but it's a completely different company. They're servicing one end industry that happens to be growing very fast right now. That means that they are growing very fast. But it does appear to me that, again, based on the limited knowledge of what this company does, that they have some long-term tailwinds, potentially. Here's what I'm looking to see. Overview of the water system. Okay, let's take a look. So this rectangle here corresponds to this area here, which is in the Permian, correct? Let's go back to that map. Well, they're both in the Permian. I meant the Delaware. So right in the Delaware there, basin. Again, this is the edge of New Mexico right here, right? And then these are Texas. Customer acreage. Contracted. So 625,000 contracted acres. 775 miles of pipeline. And then we have water handling facilities and water recycling facilities all along here. Notice how it's not all contiguous. In other words, you have assets up here that aren't connected to this, but this is very dually connected. And then we have this other area of the Midland Basin, this smaller area here, with these two, little areas of contracted acres plus produced pipeline. This right-of-way piece I don't understand, but maybe that means that they have some sort of easement that allows them to construct a pipeline there. Produce water handling capacity 1,800. I don't know what this is. Kilobarrel watt per day. No, it's not Parkins. Barrels water per day is BWPD. What is KBPD? 1,000,000 barrels per day, 1,000 barrels per day. It's a little unclear what this corresponds to, but it does seem to imply that this is the amount of barrels, and then they're measuring some sort of water capacity in terms of barrels of oil. Anyways, not really relevant to what we're doing here based on this. What matters are the volumes going up. Increased produced water volumes 2% sequentially, 6% year over year. This is the third quarter 2024, which ended. Increased water solutions volumes 27% sequentially. Sequentially should mean quarter over quarter. Delivered 54 million of adjusted EBITDA, up 9% quarter to quarter, up 21% year over year. Maintained strong adjusted operating margins of 45 cents per barrel, down slightly, but up like 15% or 12.5% from the third quarter 2023 year over year. That's really good. First half weighted capital program, some third quarter of 8 million. Weighted capital program substantially complete as planned. Capital expenditures way lower. There's a lot that I don't understand about this business and how they make money, but it's starting to become more clear. These numbers are really good. This is interesting because what's going on here is it does appear that they are making money on water per barrel. Here we go. Represents thousands of barrels of water. It does appear that what they are being paid per produced water barrel. In fact, yes, produced water volumes represents thousands of barrels of water per day. So they are getting paid per barrel of water in their business. In fact, we see their operating margins 45 cents per barrel. Steady growth, 1,092 to 1,600. That's almost 50% growth in a little bit less than 3 years. That's pretty good. Operating margins kind of volatile. EBITDA also up exactly 50%. Capital expenditure. Notice how they have a volatile free cash flow measure because again, their EBITDA is trending up. However, capital expenditures up and down. So their free cash flow isn't just up and to the right like EBITDA is. Something to keep in mind. So this does appear to be a capital intensive business. So that is one thing that we need to consider. Okay. Capital intensive. Based on current customer forecasts, anticipating strong completion activity to drive increased water solutions volumes through year end, further increasing adjusted EBITDA range to 208 to 212, 10% increase. So they raised guidance on adjusted EBITDA. Here's the deal. It does appear that adjusted EBITDA is what they care about, what management cares about. First half weighted capital expenditure program substantially complete, reaffirming full year CapEx. Okay, so here's what drives this business. What does management team look at? What do they report on? Water volumes, margins per barrel, EBITDA, CapEx, high return growth capital, no near term maturities, increased liquidity. Now we actually have some information that might help us. Next phase of water management, beneficial reuse and mineral extraction. Look at this. What's going on here? It's quite the apparatus here. Throughout the third quarter, Aris operated a third desalination technology pilot for treatment of high salinity produced water. So some of this water that the production process creates is high salinity. Interesting. So if we desalinate it, we treat it, we can use it again in, I don't know if they're using this as drinking water or what they're doing with it. They could use it in agriculture, whatever, put it back through the water cycle. This pilot demonstrated lower energy consumption than previously studied. Thermal distillation. In 2025, targeting substantial capacity scale up with joint industry partners ConocoPhillips, ExxonMobil, Chevron, and Coterra. Brine mining, iodine, conducted engineering and site identification for initial iodine facility. They're mining brine. Magnesium, initiated treatment separation study for optimizing magnesium recovery. Ammonia, continued assessment of ammonia isolation options at pilot scale. Lithium. Aris has been approached by lithium extraction companies for potential mining under a royalty model. There is so much to uncover here. Evaluating opportunities to apply Aris's water treatment expertise to industrial water applications. So here's kind of what I was referring to above. This could just be something that they're chunking in there to pump the stock price or whatever, but it makes total sense. They're basically saying, hey, we clearly have the technological capability to treat water. What else can we do with this? What else can we do with this? The fact they've been making money hand over fist does allow them to deploy money into some of this researching this additional technology, right? Again, like this quarter here, 54 million versus 8 million. They got, $46 million left over to do something with. They're saying here, their capital allocation, high return growth capital, dividends and buybacks, cash to the balance sheet or debt pay down, and then that flows down into M&A. So after they do this stuff, after they organically reinvest in the business, return capital to shareholders, then they might consider buying stuff. Their leverage is below target, meaning that they may increase the dividend more or do more share buybacks. Reduce groundwater withdrawal by more than 200 ESG public. So reciprocate for public midstream. So it's a water midstream. This is what I've been looking for right here. Aris Water is the pioneer of cost-effective full-cycle water management. Full-cycle water management. Diverse revenue streams provide a reliable base business with significant upside. Permian Basin production growth drives demand for our services. Customers increasingly depend on our expansive network to achieve their sustainability goals. Interesting. The more sustainable that oil and gas is, the better ESG scores they have, which is a big black eye for them, which may open them up to more institutional investment, which may allow them to pump their stock price higher. Commercial advantages. Significant contracted volumes of produced water gathered on our systems ensures reliable supply of recycled produced water. Reliable supply of recycled produced water. Produced water that's recycled continue to be used. Contracted water solutions relationships with our key customers provides visibility to growth. Significant inventory of pipeline right-of-way, produced water handling and water recycling permits. Prior capital investment on the gathering system enables water recycling acts as a barrier to entry. So they're kind of like a traditional midstream, like gas pipeline company, in that any sort of moat that they have is driven by the fact that they have a pipeline, right? So here we go. Full cycle water management business model. Okay. 35 customers. A customer completes a new well, or there's production from existing well, of which those two inputs, the produced water gathered on the pipelines, goes through the pipeline, goes either to water handling or to recycling. Then self-recycled barrel goes back through the system. Then you also have this like additional revenue driver, beneficial reuse and mineral extraction. So what is the color coded? The dark blue is produced water handling, gathering, treatment, and disposal of produced water. Water Solutions, sale of recycled and groundwater for well completions. And then we have this, unlocking additional value from wastewater. Does this, okay, and then in here, they're collecting the water handling fee. So they're saying, give us your water, we'll handle it. And then some of that water they're able to recycle, self-recycle. Wow, this is so sexy, guys. Doesn't this imply that so they're collecting water, they're collecting money to handle it, they're recycling it, and then it's going back through the system. So they're like double dipping. They're making money here, they're making money here, and then if they're able to extract minerals from the water, they're making money there. Again, I don't want to lean too much on this graphic to inform any investment decision I'm making, and neither should you, but it does imply. I have been watching this company for a while. However, I have not dove deep into this until now, and I will say that I am a little surprised at how fascinated I am by this company. I really like this, just common sense wise. They are the pioneer of cost effective full cycle water management. We will take your we will take your water, we will fix your water, we'll give it back to you. Here we go. Top customers by revenue: ConocoPhillips, Chevron, Mewbourne, Occidental Petroleum, other. 35 long-term customers. 97% of produced water handling volume under long-term fee-based contract. That is like a midstream company. Spot volume capacity allows for incremental system utilization and pricing. Long-term contract quality provides visibility. Okay, there's some sort of brine facility. Okay, here's the deal. That's what the company does. I'm a big fan of what I'm looking at. So is the market. This company IPO'd in 2021, 14 a share. It's doubled. Man, even just 3 months ago, you could have bought it. You would have doubled your money. I've been watching it much longer than that. Let's take a look at their financials. Obviously, we only have financials going to 2019. Revenues 118 million to 416 million. That's 3 point something times. Operating income 11 million to 107 million. Oh baby, it's a banger. It's major banger alert. 13.1 million to 59 million earnings from continuing operations. Keep in mind, this is when we IPO'd here, 2021. But even then, we've almost doubled revenue. We've more than doubled operating income. And we had negative earnings to 60 million. Net income. Here's what's interesting. Minority interest. That's something to monitor. Earnings per share, 5 cents a share, 81 cents a share. Revenue per share, 13.84. 2x sales, and it's growing that fast. Weighted average shares outstanding has gone up by about 50%, but our earnings per share has gone up a lot. This company is confusing to me because they seem like a midstream, but they're not an MLP. It does appear that they're raising shares. They're issuing shares to fund some of this capex. Diluted earnings per share has gone down. Payout ratio very volatile. EBITDA up almost 50%. Short history. clearly is growing very fast. I feel like we need a little bit shorter of a time frame here. Let's just look all the way on a quarter by quarter basis going back to March. 71 million in a quarter to 110 million. That's almost 50% in that time. Operating income, more than 50%. Earnings from continuing operations has really done exceptionally well. Okay, net income to company, but the minority interests. I feel like normally. Okay, so here's the deal. Normally, with what I'm looking at, this minority interest thing doesn't really stand out because it doesn't have such a big impact on these numbers. But you clearly see here that net income minus minority interest equals net income. In other words, this is what the this is what the operations are producing. This is the economic interest of a major shareholder. Therefore, these are the economic interests that common stockholders are uh, entitled to. Okay, so feel like we need to understand what that means. Okay. Also, how about this payout ratio? What's with this payout ratio? Our dividends. Okay, so here's something interesting. See our basic earnings per share and then our dividend per share, right? So it's about half, 11 cents versus 23. Our diluted earnings per share is less than this, 9 cents, 7 cents. Here, pretty much in every period except for these 3 quarters here, the dividend that we got was close to 100% or more than 100% of the economic earnings per share to the common stock minus this minority interest. So okay, again, we need to understand that because we need to understand if the dividend is safe. We know the dividend is safe from the standpoint of the economic earnings, right? But I feel like I need to understand what's going on there. And we see here shares outstanding going up. So how's their balance sheet look? So in any given period, they might have between 1 million and 50, it's almost 70 million of cash. Total debt, 469 million. What about long-term debt? Yeah, 452 million. Okay, you see here, so 1.1 billion of property, plant, and equipment. So, I mean, even just the map that we looked at, right? They have a lot of hard assets, right? That's what that is. They don't have a lot of cash. In fact, they have substantially more debt than cash. Here's that minority interest again. We got to figure that out. Okay, so here's the deal. The income statement looks really good. The balance sheet, I do have that question about the minority interest. It may be benign. I don't know. I gotta figure that out. The balance sheet, it looks fine, but it does appear that it's they're not keeping a whole lot of cash on hand. Um, Again, their OpEx 40. I mean, they're keeping less than a month of cash in the bank, or sorry, less than a quarter of cash in the bank. It does that concern me? Not really, not really, but it is something to consider. It's definitely not a company that's flush with cash. Um, their growth is phenomenal, both owing to what we see in the earnings report and what we see here. However, their balance sheet, I wouldn't say that it's strong. Um, so, how does that translate into the valuation? Um, well, price earnings, low 20s. On a GAAP basis, it's much higher. Price earnings growth, we know that it's good. Just seeing how fast it's growing, right? We see how fast the company's growing. We know that a low, 20 something price earnings is pretty strong valuation, and that the PEG ratio would be low. Price sales about 2 times. Price book, I think this is an important metric here to value the company like this at. Not saying that it should be 1 or lower, but seeing that they do own a bunch of infrastructure, I think it is pretty relevant what price book they're trading at. 2.5 times doesn't seem very cheap to me. Okay, doesn't seem expensive, doesn't seem cheap, just seems pretty middle of the road. Let's talk about free cash flow for a second. So see the difference between the trailing 12 and the forward estimate here. We know why that is, because their CapEx is volatile, right? Fourth quarter, they said that the high end 22 million versus 55. So that's 33 million free cash flow, right? 33 million times, let's annualize that. 33 million times 4 is 132 million. 132 million divided by 1.6. But if they were to keep this exact free cash flow, right, every quarter for the next 4 quarters, that would imply that their free cash flow yield is 8.3%. It does appear that we are assuming a slightly lower free cash flow for the upcoming year, which I think is more than appropriate. I think in terms of a free cash flow yield, which is a very, very good way to evaluate this company. In fact, free cash flow is the only thing we should care about because of these things right here, these two. Okay. Clearly, they got to spend a lot of money to make money. And they have a lot of CapEx, or capital intensive business. Based on that, based on our evaluation of the free cash flow yield, we know that it's volatile. From that perspective, the business looks very, very affordable. Looks like a good deal to me, especially how fast it's growing. If you would have bought this stock in April of 2023, you would have locked in a 5% yield. If you would have bought it December 2023, you would have locked in a 4.5% yield. Today, 1.5% yield tier. This dividend yield is basically the lowest that it's been since it reached a full year of payments. Sad. Let's look at the dividend growth profile. They've had 2 raises from 7 to 9 cents, almost 30% growth. From 9 to 11 cents, also 20 something, over 20%. Now, they haven't raised every year. We know why they're not raising 10.5 cents a share. Okay, so what do we know? They pay dividends. They are raising those dividends. They're just not robotically doing so every 4 quarters. Nothing wrong with that. Dividend growth looks really strong. Very, very strong. 12.5%. Dividend metrics looks good. Financials look good. Valuation looks good. However, I do have an additional question, which I need to know, which is, who is the minority interest? Let's find out. Ooh, here we go. Look at this. Clearly, this skew is different than here. I think this is what we're looking for right here. Delaware Energy. It says here it's holding 10.5%. Delaware Energy. Why does Delaware Energy own Aris Water Solutions? Aris Water Solutions acquires Delaware Energy assets in exchange for stock. Aris Water Solutions said in its earnings release that it had acquired all of Delaware Energy's assets in exchange for shares. When was that? The company was formerly known as Aris Water Midstream. Interesting. So this is in 2021. So they said, hey, give us all your assets. Here's a bunch of shares. $1 million of shares. Here's the deal, folks. It might take me substantially longer time than I have here to determine what is going on there. Is it a deal breaker on this stock? I don't think so. I think the main idea there is with a company this small, it is important to understand who controls it, right? Who has the majority of the voting rights? I think it's important to understand that for most companies. Most companies, though, you don't really need to do that research if they're of a certain size, right? Because usually there isn't a single point of control. So what do I grade this? First off, I'm going to say I really like the stock. I do want to buy it. I grade it a buy, despite the fact that it has run up so much in price and it could have been had for a much more affordable price. I do like what I'm seeing and I like the long-term growth prospects of this company. So what are the risks? The risks are it's clearly very volatile. I mean, you could have bought it for $8 a little less than a year ago. It's basically tripled since then. Clearly, it's very volatile. You buy in at current levels, you might be substantially down. But I do want to nibble at this. I like it. I like it a lot. The risks are the volatility. It's a smaller company. Also, before I buy shares, I need to understand how that minority interest piece is working out. I need to understand what's going on there. I'm not going to do it for the purposes of this video, just for time. If you know what that is, comment so we can get faster at what we're doing here so we can do this quicker. Lastly, let's do some technical analysis. Let's take a look. Really choppy looking chart. I mean, just look at each of these candles is a week. I mean, this went from $16. This went up by 50% in a week. And that was the week of the election. I still think there's a lot of runway left. There really is no discernible chart pattern here. Maybe we can just highlight the fact that we've got that going on. What else are we going to point out, though? This. There isn't really much to gather here technically. It was trading up. It broke down, found a new base, traded up. Then on the election, broke back up into this channel here. So here's, I think, our channel. It's trading up near the top. If it breaks out above this, it might go gangbusters. But if it doesn't, if it comes all the way back down to earth, low 20s, representing 20% drawdown from here. This looks like one of those things that you'd probably just nibble on. Again, it's a small company. There's time. There isn't really a strong discernible pattern here. However, this, where it is now, does not look like a good entry point. It just doesn't. Breaking, it's on the cusp of all-time high. It's trading far above the moving average here. See what happens. Let's see if it breaks out. Let's see if it dips down. Exercise patience with this would be my recommendation. So that will conclude our video today. I spent so much time taking a look at that. No regrets. I'm really interested in this company. We don't have enough time to cover more of what we need to, but I definitely will be watching this much more closely. I'm not going to be entering a position until I see a better looking chart. I still do believe that it has a good valuation in certain metrics. It's obviously a lot more expensive just in dollar terms than it was at one point, but it has grown very fast. It is a newer company. It is small. It's under the radar. Definitely a compelling opportunity, I think, but exercising patience. So hopefully you found this interesting. I've certainly had fun taking a look at it. I feel like I've learned a lot today, as I always do doing this. And if you found this useful, formative, entertaining, all of the above, then please consider liking this video, subscribing to the channel, and comment below. Let me know how I'm doing. I hope to hear from you. I have received a couple of submissions, things to take a look at. A couple of them I plan on doing, a couple I don't. One submission I got was of a very, very, very small, like potash miner. If the company's so small that there's hardly any data for me to take a look at here, and if it's a penny stock, if it's traded over the counter, if its market cap is like less than 100 million or its stock price less than $1, I'm really not going to look at stuff like that. I will look at stuff much smaller than this, but I need to have data. I need to have a lot of data to be able to make good, compelling videos and have informed analysis. So, anyways, but comment below on stuff that you would like me to look at. Happy to consider doing that for you. And, anyways, hopefully you found this fun. I certainly have. And until next time, I will sign off. All right. Have a good rest of your day. And I will talk to you soon.